Hi everybody, it's Chartsky. We had a nice day today, February 12th, 2018 in the live trading room. I'll show you that and a few more things and have a little announcement here for you too. But first, let's get started with a quick look at the bigger picture. Okay, here's what we were looking at this morning. This is an S&P chart from about the last year, and you can see that price throughout 2017 went up until the end of December there. Of course, you probably already knew that. But in here at the beginning of January is about when they started doing the corporate buyback with the repatriated tax-free money, and it just really shot up at that point. So if we use, just for the sake of argument, around 2,300 here is where the market was about a year ago, and then where it was when it shot up, you can see that it went up easily another 200 points or so just in January alone. Now this shows the Friday sell-off right here when the Dow closed down some 666 points. And this was the big correction on Monday, the following Monday, when it came way down. And of course, it had a little bit of follow through in the next overnight before it bounced pretty hard. But the point I want to make and show you is this. This is where price was in about the middle of October, and that's right where it came down to and tested. The key level of support at about 25.50. You see it's tested it really hard twice. Actually, it's tested it more than twice. This is a daily chart. But all the gains from October until the end of January and into February were erased in 2 days and change. So over 2.5 months, I'm sorry, 3.5 months. 3.5 months were erased in 3 days. That's how volatile these markets are. And you can see the huge ranges of some of these candles. That's 150 points. This bounce candle right here, 150 points in the Dow. I'm sorry, the S&P. The Dow has some really big candles too, but where we had days that we were lucky to see 10 points, now we're seeing 15 times that volatility in a single day. Okay, I know that was a little bit fast, but here's what happened in my live trading room on February 12th. First, in the top-down analysis that we do every morning before every session, I had just explained to everybody how the stock indexes should push up and that we were going to try buying a push. And as you'll see, the exact buying level, the exact protective stop, and the exact profit target were all called well in advance in the live trading room. Here's how it happened. Okay, 26.49. I'm sorry, very aggressive. Buying the S&P on a trade through for 5 points. It's got to get through it by more than a tick, but it should either fail and come down or push back up and make new highs. So we're going to be buyers at 26.49 on a trade through by a few ticks now, but it's very aggressive. Hit it, didn't get through. See, that's why we want it trading through. $5 points all out if we can get in. I'm not really looking at any other stock indexes. They're just too thin. That's not good enough. That's a head fake. Keep running it back up. Still interested. We may miss it. and they're just slicing it right back and forth through 26.49. All right, go ahead now, see if we can get in 5 points and hold it. May slice right through and spike up. All right, see if it turns right up. If it doesn't, we're going to have to try and get out. Come on, give us a push. A little bit of a push, a little bit more. Break even in the S&P. See if it'll go run on up there to the highs now. Should. But if it's got too much whip in it, we don't want it to get under us here. 5 points all out. And let's see, we can go ahead and mark it, I guess. Come on, push on up there. 26.55 is the high. We're going to be out a point ahead of that. +1 on that secondary push. Should run on up there. We can't guarantee it, so we got to try and trade smart. Well, they're selling into this push. Come on, a little bit more. Just be patient. Should hit and go through us. The highs are at 26.55. We're out a whole point ahead of that. Sorry about that. Talking over the thing. So there we go. Nice 5-pointer in the S&P. Hope everybody got it. Let me know. Whoops. Sorry about that. All right, Jim. Good deal, Kyle. Chris, Jose, Steve, Andrew. All right, guys. Good job. Okay, there you have it. The Daily Profit Target Plus, actually double the daily profit target on a single trade and done in less than 15 minutes. We used to enjoy these kind of days all the time, and now that volatility is returning, hopefully we'll start seeing them again. But what's important enough for me to make and upload this video? Well, several things. First, the markets are extremely volatile, so please be very careful. Go back to the beginning on the little introduction I did where you see that 3.5 months worth of gains were erased in 3 days in the S&P. And whether you're a member of my live trading room or not, I don't enjoy seeing anybody get hurt. But with that said, I know many are getting creamed in this volatility. And that's just, I guess, those that avoided the suckers game of buy the dip, stupid. Those guys got wiped out last Monday, and that includes some managed funds that lost up to 50%. And golly, that inverse VIX fund that lost 96%. So if you're lucky, you get $400 back for every $10,000 you put into that fund just the week before. Anyway, as a matter of fact, just today, I sent a long email to members of the live trading room re-explaining what I covered in the daily top-down analysis today regarding the market fundamentals and why they're so volatile and what to look for. But volatility plus low volume equals great risk, and more about that in a minute. The second reason I made it is because we're finally seeing the bigger profit target trades. But that doesn't mean that the markets are easier to trade. In fact, it's just the opposite. With the volatility, you can really damage your trading account a lot faster than when the S&P was just ping-ponging in a little 1 to 2 point range. Just last week, though, on a single day, we had 3 of these exact same $750 per position winners taken away by the high-frequency computers. Anyway, it's a great time to consider joining us in the live trading room while there's still space available if you're interested. And lastly, I guess I wanted everybody to know that I'm starting something new and finally taking somebody by the hand to help him pass a combine and become a funded trader, a fully funded trader. And if you're interested in that, you can send me an email to chartskytrades@gmail.com. Or if you have questions about this video or any of the other videos posted on my YouTube channel, send me the email to chartskytrades@gmail.com. And if you're interested in joining us, again, while there's still room, you can go to my blog at www.chartsky.com. Here's the CFTC disclaimer. It's very important. I urge you to read it. And here's the contact information again. As always, thanks for watching.
Let's roll. Hey, let's be careful out there.